Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Coupang, the Amazon of Asia or a future struggle. Company overview and industry outlook. Coupang Incorporated is a South Korean e-commerce platform often referred to as the Amazon of Asia. The company focuses on expanding express delivery services and subscription-based models, such as rocket delivery, solidifying its dominance in the local market. While the global e-commerce industry is growing, increasing competition, rising logistics costs, and economic uncertainty could impact future performance. Industry trends. Strong e-commerce growth in South Korea and Asia. Increasing automation in logistics and warehouses. Rising competition from Amazon, Alibaba, and local firms. Potential regulatory concerns over monopolistic practices. Financial performance. Latest results, Q3 2024. Earnings per share, $0.04. Gross revenue, $30.4 billion. Gross margin, 28.85%. Net profit margin, 0.89%. Debt to assets ratio, 48.46%. Quick ratio, 0.77, indicating potential short-term financial pressure. Operating cash flow to liabilities ratio, 16%. Future forecasts. 2025, revenue $35.22 billion, EBIT $1.22 billion, EPS $0.50. 2026, revenue $40.19 billion, EBIT $1.81 billion, EPS $0.79. Conclusion. Coupang is growing, but its profit margins remain low. The company needs to improve profitability to justify its valuation. Capital and financial health. Market capitalization, approximately $40 billion. Stock price, $23.65. Cash versus market cap. Exact cash reserves were not provided, but profitability of 0.89% and a quick ratio of 0.77 suggest limited reserves. Debt to assets ratio, 48.46%, a moderate level that requires monitoring. Conclusion. Coupang is profitable, but its earnings are not yet strong relative to its market valuation. Market trends and technical analysis. Support level, $23.64. Resistance level, $24. Average cost basis, $23.69. Current price, $23.65. Capital flow over the last 5 days. January 31st, plus $6.17 million. February 3rd, negative $4.65 million. February 4th, plus $3.57 million. February 5th, negative $0.81 million. February 6th, plus $1.82 million. There is noticeable volatility, with no clear upward trend. Conclusion. Coupang is in a consolidation phase. Impact of the U.S. Canada-China-Mexico trade war. Coupang primarily operates in Asia, but increased U.S.-China tensions could raise import costs and impact logistics and profit margins. A stronger dollar could make imported goods more expensive. Analyst forecasts and ratings. Average price target, $28.81. Lowest target, $23.50. Highest target, $34. Ratings. 3 analysts recommend. 9 analysts buy. 3 analysts hold. Conclusion. Analysts are generally optimistic, but the stock's upside appears limited beyond $34. Macroeconomic conditions and investment strategy. We are in the slowdown phase. Unemployment is rising. Investments and consumer demand are declining. Holding cash in U.S. dollars is advisable. The e-commerce sector tends to underperform in this phase. Conclusion. Coupang operates in a sector that is not favored during economic slowdowns. S&P 500 performance in February. Historically, the S&P 500 has had variable returns in February, typically ranging from plus 0.2% to plus 1.5%. Final verdict: buy or sell. Reasons to buy: strong revenue growth, positive analyst recommendations, market dominance in South Korea. Reasons to sell: low profitability, net margin below 1%, capital flow volatility with no clear upward trend, potential logistical difficulties due to the U.S.-China trade war. Final thought: Coupang has solid fundamentals, but its low earnings, strong competition, and economic slowdown make the timing for investment less favorable. Long-term, the company has potential, but short-term, there are no strong catalysts for a major rally. Reminder: this analysis is not investment advice. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.